Here are the crypto top headlines covered in this video. Coinbase fires back at senators asking SEC to halt crypto ETF approvals. Next, why the Bitcoin halving matters for the future of decentralized finance. Also, Ethereum ecosystem needs a major mindset shift for global impact, says Vitalik Buterin. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Coinbase fires back at senators asking SEC to halt crypto ETF approvals. Coinbase Chief Legal Officer Paul Grewal says there's direct evidence that Ether's futures and spot markets are just as correlated as Bitcoin, suggesting the senator's letter is misguided. Coinbase Chief Legal Officer Paul Grewal has slammed a letter by two United States senators urging the SEC to more tightly regulate Bitcoin ETFs and reject any future crypto ETF applications. In a March 15th post to X, Grewal criticized the senator's recent March 11th letter, which had claimed the approval of further crypto ETFs beyond Bitcoin would expose investors to enormous risks. Respectfully, senators, the evidence points exactly the opposite way, said Grewal in response. Grewal explained that the market for many cryptocurrencies smaller than Bitcoin, notably Ether, demonstrated quality metrics that exceed even the largest traded equities. ETH's spot market is deep and liquid. Only two S&P 500 stocks have higher notional dollar trading volume, added Grewal. Grewal added there was direct evidence that Ether's futures and spot markets were just as correlated as Bitcoin's. When compared to Bitcoin, ETH's future and spot market demonstrate exactly the same type of high and consistent correlation that would enable market surveillance. On March 9th, Coinbase and crypto asset manager Grayscale met with SEC officials to discuss a rule change for the launch of spot Ether ETFs, where Coinbase argued that if the SEC approved Bitcoin ETFs, they should approve Ether ETFs as well. Some analysts have suggested that Grayscale may be using its futures ETF application as a Trojan horse to corner the SEC into approving its spot Ether ETF. Several industry pundits, including VB Capital, general partner Scott Johnson, and Bloomberg ETF analyst Eric Balchanis, have predicted the SEC is looking to reject the pending ETH ETFs on the grounds of correlation, the difference between the price of spot and futures. Nate Garachi, the president of the ETF store, said it was clear that Coinbase was now going all in on supporting spot Ether ETFs, hinting that conflict between the crypto exchange and the regulator could soon escalate ahead of the May 23rd deadline for an ETH ETF decision. None of this is about protecting investors. It's all about politics. Sad. It's all sour grapes because investors want exposure to spot BTC ETFs, Garachi said in a follow-up post. Garachi added, it was clear the SEC was gearing up to reject this pending Ether ETF applications on the grounds of correlation, but noted that they had approved Ether futures ETFs. In the March 11th letter addressed to SEC Chair Gary Gensler, the two Democratic senators, Jack Reed and LaFonza Butler, claimed that any further crypto ETF approvals would see investors exposed to risks stemming from thinly traded markets rife with fraud and manipulation. Alongside a series of requests for more stringent regulatory oversight into Bitcoin ETFs, Reed and Butler added that markets for cryptocurrencies smaller than Bitcoin were far more exposed to misconduct. There are currently 8 proposed spot Ether ETF applications awaiting approval by the SEC, and there have been hopes that other altcoins could eventually tread a similar path. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: why the Bitcoin halving matters for the future of decentralized finance. The Bitcoin mining reward rate gets cut in half every 4 years, but this seemingly simple event carries with it deeply felt implications for the future of DeFi. In the ever-evolving landscape of cryptocurrency and blockchain technology, few events hold as much significance as the Bitcoin halving. This landmark event occurs approximately every 4 years, or at every 210,000 blocks, and serves as a fundamental mechanism that cuts in half the rewards paid to Bitcoin miners. The first halving event happened in November 2012, when block rewards fell from 50 BTC per block to 25 BTC. The upcoming halving is anticipated for some point in mid-April 2024, during which the rewards per block will fall to 3.125 BTC. Beyond its immediate impact on Bitcoin's supply dynamics, the halving event reverberates throughout the entire cryptocurrency ecosystem, including the realm of decentralized finance, or DeFi. Cointelegraph spoke with a number of experts across the DeFi space, from market analysts and Bitcoin-related business executives to advocates for the currency's adoption, to find out just what kind of impact they see this having on the community. Boosting the market. At its core, the philosophy of DeFi aims to democratize access to financial services by leveraging blockchain technology to create open, permissionless, and trustless financial systems. Being the pioneering cryptocurrency, Bitcoin plays a pivotal role in shaping the ethos and infrastructure of DeFi. Therefore, any event affecting Bitcoin's supply and market dynamics inevitably influences the trajectory of DeFi. Zagor Raz, a market analyst at invest.conotoxia.com, told Cointelegraph that not only could this halving increase Bitcoin's value, but strengthen the overall crypto market. He said, as Bitcoin is a vital part of the DeFi ecosystem, an increase in its value could attract more investment into DeFi platforms and projects, increasing their growth and adoption. He added that, for the moment, however, Bitcoin's position is strengthening relative to the overall cryptocurrency market and is already reaching 54% of the capitalization of the market, proving that capital first consolidates on the main cryptocurrency. Only later can it move to the other projects. Fluctuating price and a test for decentralization. With increased Bitcoin scarcity, historically the space has seen a price appreciation for the cryptocurrency as a subsequent effect. A rising BTC price can act as a rising tide that lifts all boats, potentially leading to increased investment in DeFi protocols and applications. The reduced issuance rate of Bitcoin may also affect its availability on decentralized exchanges, or DEXs, and lending platforms, where it often serves as collateral for a variety of financial activities. A scarcity of Bitcoin could also mean its utility as collateral could possibly increase and potentially impact borrowing rates, liquidity pools, and yield farming strategies within the DeFi ecosystem. Moreover, the Bitcoin halving serves as a litmus test for the resilience and adaptability of decentralized financial protocols. As the cryptocurrency market experiences fluctuations in supply and demand dynamics, DeFi platforms must innovate and iterate to accommodate changing market conditions. Joe Hall, a Bitcoin journalist and adoption advocate, said that either a project is decentralized or it isn't. He said, Bitcoin is clearly decentralized, whereas most, if not all, projects that claim to put the D in DeFi are far from it. I would hope that Bitcoin's anti-fragile and predictable stance shows the DeFi projects the true meaning of the word. Attracting outside attention. With each halving, Bitcoin steps into the mainstream spotlight, if only for a moment, with major media outlets covering the event. This moment can not only create interest for new investors, but also for regulators and developers, which could lead to anything from a push for stricter regulations on the DeFi space, but it can also inspire innovation as developers work to create DeFi solutions that comply with evolving legal frameworks. Hall said, "The predictability of the event, something that could work for the crypto industry, which is known to typically puzzle regulators." Uncertainty has been a standout theme for the 21st century in both finance and politics, and Bitcoin's predictability enhances its appeal. This sentiment was echoed by John Dani, the founder of the education project My Primer Bitcoin. The halving is one of the most visible examples of Bitcoin's predictability and decentralization. We all know it will happen, and no single entity or group has any more power to change it than anyone else. The Bitcoin halving is not a magic bullet for the success of the cryptocurrency or the DeFi ecosystem as a whole. However, it does serve as a significant event that can play a role in shaping the future of this rapidly evolving space. Our next top headline: Ethereum ecosystem needs a major mindset shift for global impact, says Vitalik Buterin. Ethereum takes a significant step towards a Layer 2-centric future after the Decentralized hard fork, leading Vitalik Buterin to call for a shift in mentality. Ethereum co-founder Vitalik Buterin is calling for a mindset shift toward building Layer 2 or L2 decentralized applications and solutions following the successful completion of the Decentralized hard fork. Speaking at the ETH Global's Pragma London event on March 14th, Buterin hailed the completion of the network upgrade, which enables L2 rollups to achieve scale by reducing the costs associated with submitting cryptographic proofs to Ethereum's base layer. We have officially hit basic rollup scaling, but we need to keep in mind that things will be incremental from here, Buterin told a packed crowd gathered at the Christchurch Spitalfields venue. The event drew over 500 attendees ahead of a weekend-long hackathon, and Buterin's attendance served as a big draw card towards the end of the day's program of speakers. Given that Denkin hit the mainnet without any hiccups, there was a palpable sense of yearning to hear what is next for Ethereum from arguably its most crucial founding member. Blobs are here. Buterin reflected on his widely cited roadmap for Ethereum following its successful transition to proof-of-stake consensus after the merge in 2022. The co-founder said that many of the milestones he'd laid out were primarily engineering tasks, some of which came to fruition when Denkin was finalized. Denkin included Ethereum Improvement Proposal EIP-4844, which changes how Ethereum rollups store data on mainnet. Several Layer 2 rollups aggregate and process transactions off-chain and submit a summary proof of these transactions to the Ethereum blockchain. EIP-4844 introduced a new way for rollups to add cheaper data to blocks by introducing blob space as a replacement for using call data for storage. Using call data to store cryptographic proofs of off-chain bundled transactions has been historically expensive because all Ethereum nodes must process the data that lives on-chain indefinitely. Proto-danksharding, named after the researchers who proposed EIP-4844, allows rollups to send and attach data blobs to blocks. The data is not accessible to the Ethereum virtual machine and is deleted automatically after 18 days. Ethereum is in a process of change. Ethereum has been in constant flux over the past decade, and Buterin highlighted his belief that its ecosystem needs to change its approach to have a significant impact on the internet and conventional financial systems. Buterin views the first decade of Ethereum as an inwardly focused period, reflecting on how the ecosystem was developing things for itself. The tech geeks were trying to satisfy tech geeks and create beautiful technology. The second decade needs to see Ethereum breaking out and having a big impact on the world. The Denkin hard fork has played its part in this narrative, allowing the Ethereum ecosystem to shift away from a Layer 1 centric focus. Buterin also expects to see Ethereum's base layer moving away from a period of rapid change to one more focused on maintenance. We are on the decelerating side of things. I actually think the biggest changes are behind us, which is amazing. While the Ethereum co-founder concedes that L1 changes will continue to be part of the development of the ecosystem, an L2-centric mindset should take hold going forward, focusing on application developers. Buterin said, "The ecosystem has created a wealth of tools to build dApps, chief among them being zero-knowledge proofs. They're able to build applications that are much more scalable and to build applications that do a better job of preserving users' privacy. And the ease of doing that has increased massively compared to 5 years ago." Buterin also implored builders to adopt an Ethereum 2.0 approach to development that makes use of contemporary tools and protocols like L2 rollups to tap into improved privacy, security, and performance benefits. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.